Welcome, everyone. I'm super excited to be here and to host representatives of two of, I think, some of the most exciting blockchain companies in the world right now, both of which happen to be in iAngels and iCapital portfolio. We have Yaniv Feldman from First and Or Perelman from ChromaWay. Today we'll talk about different topics on each of our minds, and we'll also have some time for each of you to ask questions. So starting off, over the last couple of weeks, I think we've all seen or experienced crypto markets and the blockchain markets go back to 2017 levels, and it's actually worse than that because we have more than double the projects. So, Yaniv, I always appreciate your data-driven approach and your healthy skepticism. So tell me, is crypto here to stay?
So basically, the idea behind crypto, not blockchain technology, but the entire concept that stands behind mutual governance is definitely here to stay. To my opinion, Bitcoin is something that changes the way the economy works, and we can see right now what's happening in the markets worldwide. Turkey, Venezuela, Iran, Zimbabwe, right now these are third world countries losing or devaluing their currencies, but we'll start seeing that in more and more Western countries soon, at least that's how it looks. So Bitcoin is definitely solving a problem or providing an out from the traditional monetary system. Ethereum is still in question, right? Because when it launched, it was supposed to be a decentralized computer, and it became a fundraising platform, basically a Kickstarter on the blockchain. We saw it work great in 2017, and then we saw everyone who raised money on Ethereum dumping it on 2018, and the market is where it is right now. So if we're talking generally, blockchain is definitely something that's going to change technology. It already started to make its way through. The internet took a little over 20 years to get to mainstream, to the beginning of mainstream adoption. I don't think blockchain will take that much, but we'll still have a few hard years before we get there.
Yeah, I agree with Yaniv in that. It's still a very early market, so it will take time to get mainstream adoption. And if you don't look about only the price, and if you look at the adoption rate, so people build a lot of different applications on that, and all of them has sales cycles as well until they manage to sell this certain application to whoever they want to sell to. So a sales cycle takes time, not only to blockchain, but to also normal fintech applications.
Explain a little bit what you're doing so they'll understand the context of what you're saying.
Okay. So yeah, in terms of me as well, I've also been selling blockchain to enterprises for quite a long time. So I know personally as well that to take it from a POC level to a production level takes above 2 years at least, or of selling purposes, from POC to production and to a small demo. So to different stages of the process. So it takes time. It takes time to new technologies as well to replace legacy systems. Sometimes you don't want to even replace those. You just want to implement something softer on top of those legacy systems, so it will be easy for them to adjust. So that's only my take. So regardless the price, I think it's important to keep building, and crypto will always be here to stay.
Okay, so maybe let's take a step back, and Yaniv, why don't you tell us a little bit about who you are, how you got to the industry, and about First, and then afterwards Or can tell us also about ChromaWay and his experience in the industry.
Okay, so I'll try to make it short because it's a very long story. It's about 8 years old. I started following Bitcoin in 2011. I wrote my first guide in Geek Time on how to buy Bitcoin in 2013. That was the first 3 Bitcoins I bought at the peak at 2013. But I hodled. So in 2016, a little after the Ethereum ICO, the token dropped on me. I actually realized that blockchain is more than just an alternative currency, and there is a lot of things that you can do on top of it if you understand both the technology and the economics behind it. So I started, diving into the rabbit hole, as they say. In August 2017, I left Geek Time to start One Alpha, which is a data intelligence research and analysis company. I've joined First, running One Alpha under First around April this year. And basically what One Alpha is doing is providing research and analysis services on top of a data intelligence platform. To think of it as Bloomberg for cryptocurrencies or Crunchbase for cryptocurrencies, on top of that, we have analysis and research services that we provide. I went into First because what First is doing is really compatible with what we started doing, is basically providing a bridge between the old economy and the new economy. As a part of my advisory position, I sit with a lot of clients, usually in the middle of the table, where we have like the innovation team on the one end and the compliance team on the other end, and everyone are yelling at each other without really understanding or listening. So the importance of having a bridge that understands both, the requirements of adaptation from the old economy and the needs and the ideals that the new economy can bring is something that I feel very important. First does that on the financial level. If I do that more on the research and analysis and educational level, First does that on a financial level. First is basically a financial asset service provider, regulated financial service provider for crypto, with 6 different companies underneath. Providing a breadth of financial services to ICO, high net worth individuals, institutional investors, and many more. I think we're the largest or one of them in Europe right now. Yeah, and that's basically it.
So I discovered Bitcoin in 2011. And I co-founded a very early Bitcoin wallet called SafeBit with a partner of mine. It had a few thousand of users back then. We were the first ever Bitcoin company. Yeah, it's coming back in a different fashion. So we were the first ever Bitcoin company to ever being featured in TechCrunch, which was kind of cool. 2012, I saw this cool video about color coins. I asked Manny Rosenfeld, who many people here know him, hey, who is doing that? So he introduced me to my partners now. Alex Mizrahi was the technical lead of the color coins project, and Henry Kette, who used to work with him as well. So, so my partner, as I mentioned, Alex, he built the first ever color coins protocol, which was kind of like ERC20 on top of Bitcoin, which was the first way to issue assets on top of the Bitcoin blockchain. And we did that for 2 years. In 2014, we founded as the official company. Firstly, we had color coins as the first product of us, and then we still we were letting basically companies and institutions to issue assets on top of the protocol. And we had a couple of use cases for that. One which did shares on the blockchain, which is still live and running. And another bank that used to issue euros on top of the Bitcoin blockchain, kind of like stable coins nowadays with a centralized fashion. But we quickly then realized you cannot build anything on top of any kind of connect infrastructure because the infrastructure is so bad, even to this day. So basically what we ended up doing was combining basically relation and databases system. I'm not sure that many here familiar with the topic, with blockchains as a general overview. So that's basically what we are doing now. We targeted enterprises as our first use cases first. So we had a lot of different customers, Swedish land registry, Swedish government, which just did a live real estate transaction on top of our platform like 3 weeks ago or 4 weeks ago. With the whole process of a real estate sale to reduce the friction and reduce the time from 3 months plus to only a day using an app and the end user don't even know is using the blockchain in the backend. Different use cases, different verticals. We are a platform, so we don't care what typically the use case will be used on top of us.
So, Or, you've basically been providing enterprises with blockchain solutions since 2014.
Yep.
And now you're building a public blockchain. Why?
Because that was our first goal from day one when we designed our framework. So we didn't specifically design a private, permission blockchain. We designed a framework where we could take our framework and designing to be a public chain when we see the time fits to it. And we realized that still in 2018, you still don't have a very good infrastructure out there that people can, normal developers can actually build applications on top. So that is why we decided to take our concept of what we actually built and put it in the public chain sphere, because we think that there is still no usability factor for a developer to actually build applications, blockchain applications on top. Not a lot of the companies or startup companies has a budget to hire Solidity engineers. So that is how we are reducing friction as well there.
So we're seeing large corporations like IBM and Amazon trying to experiment with blockchain, but they're not doing it through the public blockchains. They're doing it through consortia or private blockchains, using other types of mechanisms like proof of authority. Do you really see a transition from private blockchains into public?
In the future, yes. It will take time, but right now, yes, as you mentioned, a lot of them are using something that is called permission chains, which of course we support as well as part of our big stack. But we will. I think that we will see over time huge institutions realizing the real power of public chains, and then they will at least use the public chain in some kind of veracity or capacity within their solutions, because in the end they want immutability and they want transparency, which is very, very important. So like that's my take on it.
So in, let's say, 2 years from now, how much of what ChromaWay does is going to be public blockchains or the public blockchain versus how much is going to be the kind of the enterprise permissioned private blockchain version?
I think it will be kind of a mix, like maybe 60-40 to public chain, just because we see a lot of interest in public chain again as well from different kind of customers. So we are happy that we can play in those both worlds, because a lot of public chains are trying to come into the enterprise world again as well, and we are coming from the enterprise world to the public chain, so we know what the customers want. So we know how to adapt our software in terms of real demand from users.
I know investors and people like me are really wishing for enterprises to adopt public blockchains and create decentralized applications. Yaniv, do you really see this happening?
Basically, the entire concept of enterprises running a decentralized app is pretty much, the opposite of what they're meant to. Businesses are businesses. They're for profit. They're in to make money. They're in to be the intermediary. And being decentralized is just, the opposite of taking it out. I see different kind of use cases where blockchain technology can be used to run very specific applications, mostly cross-enterprise applications where different sides do not trust each other and need the trustless and immutability. But currently, right now, most applications that we see in enterprises are just, explorations of the blockchain hype and trying to understand and what's the difference between just using a relational database and working on the blockchain. We've been seeing interesting experiments from companies all around the world right now. We're seeing Amazon and Google and Microsoft offering blockchains as a service. So in my perspective, on the one hand, they're making the technology accessible, but on the other, they don't really get it. Because blockchain as a service, if you provide that as a service, they're not really performing what they were built or what they were planned to do. If I trust Microsoft to run my blockchain, then it's not really decentralized. And there's no, there is a single point of failure, and it's just not really fulfilling their goals. So I think it will take a while until enterprises will really be able to understand, in 1980s and 1970s, people, the only thing you could do in internet is send pings and messages from one side to the other. Large enterprise, it was first defense contractors, DARPA, and later on universities that came in. Big enterprises, it took them, again, like 20 years to finally understand how the internet could be used for their kind of business. And if I, just sum up, it'll take a while until they understand how the technology is being used, and I don't think we'll actually see an enterprise initiating a decentralized network anytime soon before they understand that cannibalization will come anyway, and if they don't do it to themselves, someone else will, just like innovation. It happened with plenty of other technologies in the past, and it will in the future, but it'll take a few more years.
So, I mean, one of the biggest issues, and everybody talks about it, the hurdles for mass adoption is user experience. Why is user experience so bad? I mean, it's been like a decade.
Forgive me for going back to history, all that back, but when I got, my first computer back in the 80s, first off, we didn't have internet back then, but when we just started the internet, you had like protocols like Gopher and FTP and IRC, which are all like textuals, and you need to be, an early adopter and a technology-oriented person to try and work with. Like every new technology, there's a learning curve and an adoption curve. In order for blockchain or stuff that are based on blockchain to reach the masses, it needs to be where the internet is today, meaning we have no idea how it works, but it just does. And until we get there, I don't see that, that mass, at least the application layer adoption happening. The best example we can see right now is any dApp that basically requires payment. You use stuff like MetaMask, and you have to open an account, and then you get a window with numbers and gas and stuff that you don't really understand. So a normal person like, my mother or my sister can't really use that. They don't understand how to use that. So until we get to a place where it's transparent and we don't really know that it's there, that's when, it'll take off.
Yeah, I agree. I mean, as a past experience of what we did, there is a company which is called, for example, Thunderbeam, which is, they use our old protocol, but they don't actually say that they are using anything that is related to blockchain. So if you take a look at the website, they are like a purely kind of like AngelList, and the end user even doesn't even know he's using the blockchain to trade his shares or whatever. So like it's again like to that point of a factor that nobody needs to know. It's like HTTPS and the internet again. So like nobody knows they're using an actual protocol, but they're using the internet to surf online.
So we're hearing a lot of buzzwords around blockchain and how revolutionary it's going to be and how it's going to change our lives and how it's going to disrupt the world. But really, if you go and see kind of the state of the dApps, most of the dApps are in gambling and in gaming. Actually, like 30% of Ethereum deployed smart contracts are for gaming use cases, which doesn't really feel disruptive.
40% are Ponzi schemes, so we're in a good place.
But again, I mean, I personally, I don't see kind of this gaming industry as being so inspiring and disruptive and compelling. So why do so many entrepreneurs focus on this area? I mean, even ChromaWay looks at this as kind of a go-to-market and a potential for business.
Yeah, because other use cases with other applications usually take long sales cycles as well. So as I said earlier, if you have a supply chain application, then you have to onboard many users to that specific application. But with a game, either it's a hit or not. Like you can have 20,000 users, 10,000 users, 500 users, whatever it is. It's much more than an actually application with real estate or fractional ownership or like whatever it is. So like it's really a faster go-to-market. I think that people seen that because it's easier to create games and attract users than to long sales cycles to whoever knows what happens. So like that's my take on it.
The analyst take on it is rather simple. Basically, games are attractive to a more early adopter audience. People who are more tech savvy, usually a younger audience who find it easier to handle stuff that are more complex. So gaming, is something that is much easier to attract, even if it's not working in full, even if it's harder to understand. And it's a good way to start implement and test how the protocol works. Basically, CryptoKitties, it was a game. It wasn't meant to be, an overnight success. Even they didn't think, it will get to where it got. It was a way for them to test NFT, the non-fungible token protocol or RFC that runs over Ethereum. So they just wanted to test stuff out. And eventually, because gaming and collectibles are stuff that are rather simple to understand and they attract a very specific kind of audience, it was a success for them. So I think that's why a lot of the chains right now, if we're talking about EOS or Neo or any other platforms, they're trying to attract mostly game developers right now, and people or developers are going and building games because they think that is what will help them bring users right now in comparison to any kind of decentralized app where the infrastructure is not really ready to sustain. That will take a few more years to come.
So by the way, you mentioned an interesting trend of non-fungible tokens. Maybe we'll get back to that later. But before that, I wanted to ask, who in the audience buys crypto or bought crypto? Wow. First of all, I'm so happy you came here and didn't kind of crawl under the sheets in the bed, and still interested in hearing about what we have to say. I'm sure that at least half of you will share my experience of looking at dozens and dozens of protocols, and everybody is saying the same thing. I can do 20,000 transactions per second, or 100,000 transactions per second, or a zillion transactions per second, and I'm more decentralized and more secure and better than Bitcoin. And like asking yourselves, till when am I going to be hearing these pitches? And okay, so for my skeptic, Yaniv, are you buying it?
First off, full disclaimer: I do not and never have invested in ICOs. I do buy and own crypto, but I think that right now there's a huge gap between where the industry thinks it is and where it really is. We got a huge slap in the face in 2018. We realized that we're not there yet. But basically, we look at ICOs like startups. And ICOs are basically early stage investing in a very early on market that will take time, not just for their solution, but also for the market to mature. And if you want to look at it from the positive perspective for a second, even though I'm a skeptic usually, there are ICOs, not a lot, but there are a few with interesting use cases, with actual potential to use the blockchain to do something. But that's what it is right now. That's a potential, nothing more. So if you understand that, and if you understand where the market is right now, then fine, you can go ahead and invest. But most people don't. And one of the big lessons that you get when you start trading, the best way to attract fools' money is to make them think that they're going to do more money. It's not, most of the tokens right now, at least were until the last couple of months, were utility tokens. where people were supposed to buy the token in order to utilize a specific app, even Ethereum for that matter. But who here in the room bought cryptos in a purpose of using an app? One person, what? Binance. Oh, you bought BNB tokens for discount. Yeah, that's pretty much the only model that works right now. So that's that exactly, and I think that until most of the financial ecosystem and the tech ecosystem will understand that that's where we are, and from my perspective, we still have another at least one or two boom bust cycles until that happens. We haven't lost enough money yet for that to happen.
Oh my gosh.
Listen, the dot-com bubble was 6.5 trillion when it bursted. So, you know.
It was only America. It was
Yeah, and you know, Bitcoin got to 800 and, not Bitcoin, the market got to 823 billion. The low point was like yesterday or the day before around 200. A little under. So, and we'll see a couple of more of those before we get to where, you know, the internet growth curve went after the dot-com bubble. I think we'll get there, and I think ICOs, not in their current form, will be a big part of that game. I think that one of the things that the blockchain enables is a platform, a more accessible platform for crowdfunding, you know, at least until regulation kills it. And I think it's going to be a part of it. But again, we have a few more years to come, and we need to have the patience and understanding that it takes time for a market to mature.
So, Or, why don't you position ChromaWay on the map of protocols? Where are you in terms of transaction per second, decentralization, security?
Well, in terms of transactions a second, I mean, we can do 500 transactions a second now, which is not that bad. We will do much more faster transactions as well in the future. But in terms of like, again, what we are doing basically, we are solving, I mean, in a way, usability for the end developers. So for example, you have a lot of problems in terms when you come to develop an application. It's really hard to perform normal database features on the ledger. So you cannot search on the blockchain. You cannot do simple stuff like querying in the blockchain, like normal database features, without any kind of transition layers, transition tools, or like another different language or whatever it is. So with our basically platform, you can literally do all those stuff automatically on the ledger. So hence we are basically reducing the friction for the developer to actually build an application. So you don't need to learn any kind of Solidity. You can use your ordinary developers to actually develop a blockchain solution of your likeness. So you just need to hire, like, if people know what is SQL, normal SQL developer, then he can actually develop an application. So that's about it. So like we can do a very nice amount of fast transactions. We are using a very secured as well consensus mechanisms, and we are actually doing a combination of what is called BFT. I'm not too sure how many people know what it is today here. BFT, a little bit of consensus mechanism, BFT, staking, and as well what is called anchoring to proof of work. So like we also record the transaction in our system, also in a proof of work protocol. So either in Bitcoin or like Ethereum like protocols. So that's basically a short thing about what.
So you're competing on developer friendliness versus transactions per second.
Yes, I'm solving both. Also, we don't have any gas fees as well. So like we are the only thing that it's up to the developer to actually pay the hosting fee for the application as a whole. So instead of ordinary users have to pay gas fees each transaction, they don't have to pay anything, in just a simple amount of the app developer himself to actually pay the hosting fee for the servers. So basically, people can actually build applications on-chain instead of like writing everything off-chain like people actually use today, and just use it for non-fungible tokens or whatever it is. So basically, take a look at the game nowadays. So in a game nowadays, people only do tokens, but with our solution, basically, they can actually implement an entire troops on-chain. They can implement an entire rules engine on-chain if they really care about transparency and not having the ability to actually implement it only in database systems. So basically, we gave them the ability to actually implement stuff on-chain which they couldn't have done before. So they won't have the excuses anymore to not have it on-chain if they don't want to.
I just want to add another sentence to my last answer, and you asked about the future of ICOs. The best way to understand is look at Bitcoin and Ethereum the way that we look at Google and Facebook right now. Right? It's like asking whether there will be a place for startups. So when you get to a specific scale, it's very hard for you to innovate. We see how long it takes to put in changes in Bitcoin and Ethereum right now. And obviously, there will always be new startups trying to reinvent things. The interesting thing will be is how they will correlate. We haven't seen an acquisition or any kind of merger between protocols right now, so it's very interesting to see how that develops. But basically, it's around the same kind of comparison to make.
You know, it's interesting that you mentioned this. Actually, token activism is something that horrifies me the most. I mean, me investing in a token of a company, and obviously this company has assets, right? It has a lot of cash, crypto, talent, technology. Seems like the perfect M&A target and the perfect value destroyer for me as a token holder. So it'd be interesting to see how the world develops in that sense.
So yeah, basically, like I mentioned early on, blockchain is basically a form of scalable governance. And when you look at all the applications, all the bigger protocols are giving some sort of on-chain governance, and it's very easy, if you have enough money to destroy the protocol or just make it useless. But what's good with decentralization is that if something like that happens, the community can just fork away and leave the attacker on the side. A lot of people ask, what will happen if Bitmain or the US government will put a 51% attack on Bitcoin or Ethereum or any other protocol for that matter? There are a few answers, but the easy one is that the community will just fork away, change the consensus mechanism a little, and will make the attacker work harder and harder every time they want to attack the chain. So basically, as an investor, it is frightening a bit to invest in something you can't really understand, especially in a sense where buying something with a stake of ownership is not something that was common. We can't go to a store and pay for something with an Apple stock or an Amazon stock, which is what basically we're trying to do with utility tokens in every form. But I think that going forward to the future, there will be seamless transition between the protocols. Bitcoin might or might not be, the basic one.
What's your view, by the way?
So basically, while this is not an investment advice, I do believe that Bitcoin is in a place where it is, we call it in economics the too big to fail. When it passed the, again, I'm an analyst, so I'm looking at probabilities. Everything that passed the value of $100 billion has less than a 5% chance of dying. Okay, it happened to Yahoo. It happened to other companies as well. It happened even to countries. But But if you're looking at the grand scale, from stuff that went over that valuation, not a lot of them fail eventually. And I think that for Bitcoin specifically, even though it's very hard to innovate on top of it because it reaches where it got, it's still the network that is most secured and will probably continue to be the most secured and therefore most valuable in the long run. And I think it will be cornerstone for basically everything else in the industry.
By the way, Ethereum also has 100 billion valuation.
Yeah, and then dropped back to
25.
So actually, you raise a lot of things that frighten me as an investor. One of which is the kind of notion of forks. I think one of the beauties in blockchain and decentralized applications in general is the fact that it keeps the leaders of the blockchain in check. Because if you don't agree with the values and the leaders don't manage to kind of keep everyone within consensus, theoretically, people can just organize and fork. And we've seen this already with Bitcoin Cash. So here I am investing in OR and kind of the blockchain that they built, and with all the features and the developer friendliness and etc. And one day someone can just come and fork ChromaWays, and it can happen so fast before they manage to really generate the network effect and the adoption that everybody's looking for.
Well, I guess we can stop it, right? Because it's the decentralized nature of that. But I think, people will still follow, the leadership because they will see the leadership as it is. And if you look at past cases as well, there was Ethereum Classic. And nobody really gives a crap about Ethereum Classic, almost. It still has value, right? But nobody really follows that. So a lot of people still see the real Ethereum as the real Ethereum. People fork protocols, people will continue to fork protocols, but the real protocol is the one that will survive in the end, because if you couldn't change the consensus rules on that specific protocol and you forked it away, it means that you kind of lost the war and you couldn't make the changes you wanted to do in the ordinary protocol that you wanted changes on. So that's chicken and egg thing.
Working for a second on the side and just say, let's say ChromaWays, you built such a great technology, and the Ethereum developers see what an amazing user experience you're providing to developers, and they already have kind of the platform and the ecosystem set up. What would stop them from doing the same thing?
What would stop Facebook from doing any other startup that's being developed?
Well, the difference between that is that startups actually have IP. They don't have to feature all their code and everything they're doing online. The whole point of blockchain and decentralization is that we're reducing here barriers to entry.
Well, Ethereum has been speaking a lot about Plasma and a lot of other solutions for decades. Not decades, because it doesn't exist decades, but figure of speech.
It feels like decades.
Yeah, it does feel like decades. So they've been speaking.
Crypto years.
But I think the whole governance model is very, very wrong, because in a foundation model, it takes a lot of time to actually make any kind of decisions. And people pull for a different kind of type of decisions, and they want it to go that way. And hey, they want to focus on scaling, they want to focus on usability, they don't know what they want to focus on. So it kind of make their problems in a slow fashion, while we didn't want to do a foundation just because of that, and we want to break things fast, if you want to call it like that, and make decisions faster. And that is why we didn't start with a foundation model like a very ordinary public chains out there, because we know it can make things very, very slow. And for that, you have Ethereum as an example. They are talking about all those solutions, but none is being done. So Vitalik tweets all day. So that's what he likes to do best. So
it's interesting what you say, and you talk about governance and saying that Ethereum's governance is this or that. And in general, I hear a lot of projects talking about governance. I mean, this is the whole point of blockchain, right? Having kind of a decentralized governance. But the reality is that the projects today are all centralized, except Bitcoin and Ethereum to an extent.
Decentralization is a scale. It's not a 0 to 1 game.
Of
A
course.
lot of people like to look at that way, but it's not. So basically, Bitcoin is more on the decentralized scales, at least the farthest on the decentralized scales. Ethereum close to it, but most of the projects are way on the other end.
Right. So for me, it's interesting also to understand, from your perspective, or how do you see the future of governance of Chromopolis, and have you already been thinking about how to set it up?
Yeah, of course. I mean, we are thinking about it. We are losing a lot of sleep about it. So basically, as you said, a lot of chains started in a centralized fashion. Even Ethereum started as a very centralized fashion. So while we don't actually select the nodes, we actually approve the nodes at first. But we have a very different strategy as well, because in our chain, for example, each sidechain can select their own governance, so they can select their own nodes, basically. So we hope the more the applications that will be built on us, the more nodes that there will be on top of our chain. So what we call is this like a horizontal solution, because you don't have 10,000 applications on one main chain. You have one application on each sidechain, and those applications choose their own subset of nodes. So we hope that in the end that we will have a lot of different kind of nodes in the system for different kind of applications too. So we hope that the more the application will be, the more decentralized it will be.
How will decisions be made, though?
In terms of
what to do, what directions to take, what to focus on?
So in the start, it's basically we are doing the decisions ourselves. So we are the ones that are actually developing the roadmap and executing the roadmap ourselves. So that is how we hope to actually address that, at least at the start, because we want to move fast and we want to execute as many features as we can, as possible, that we see that we think is a fit. But while the developer community grows, that is something that we'll indeed need to actually think about how we actually perform this mechanism of listening more to the community and what they want to actually perform in terms of features on top of our platform.
Okay, so there's no kind of strategy or framework that...
I want to add a note, because you said investors are afraid of forks and what's being made. I think from my perspective, what I've been seeing is that most investors right now don't understand that investing in crypto is different than investing in equity or in companies, because it's not a company with a business model that makes money and will someday do an IPO or not. It's an economy. And the way you make money in an economy is different than the way you make money from investing in a company. And if a company forks, let's say the usual way, it's not, you don't care because you get, both tokens. If someone takes the code and just use it, a lot of companies work with open source, then it basically says that investors are afraid of open source. That's a completely different discussion. But I think, as I see, an interesting trend to the future, you see a lot of investors that don't just invest in the economy money, but they're also investing in infrastructure, being, the role holders within the economy, running nodes, doing calculations, validating things, and that's, the real value that you provide an economy with helping it scale, and that's how you create value to yourself as an investor. So that's just my perspective.
First of all, I'm glad that you kind of bring it up, because it's, you're bringing us back to one of the topics that are interesting to me, which is how do I make money from this? And you mentioned that that investing in crypto is not like investing in companies, but at the end of the day, it is about the amount of value capture you get versus value creation. And similar to startups that have broad usage but no business model, a utility token can be completely useless if it doesn't capture any of the value of the network. And I think there's a lot of interesting literature on the space of crypto economics and people talking about this and that model of governance tokens versus work tokens versus mint and burn tokens versus staking tokens. But in the end of the day, no platform yet has really proven that it knows to generate value for its token holders, even Ethereum. I mean, there's no reason today to hold Ethereum other than investing in an ICO.
So first off, you are correct. For Ethereum, that's one of the Ethereum started as as being the gas for the Ethereum network, and because the use case for that as gas is so low, then ICOs has become the main use of it, and that's why the price is where it is right now. But I think that if we're looking, at the economics, I lost my thread of thought for a second.
Crypto economics, what works?
So basically, again, most investors right now are looking to increase value through the value of the network. You due diligence the company that builds the protocol as you due diligence a startup, but a lot of that is looking at how the economics can scale. If there's a real use case right now, probably isn't, but how big it can grow. And you see investors, again, they're trying to build value to their investment by helping the economy behind a specific project to grow. And you're seeing that, if we're talking about the different kind of models, each of them has, a specific utility or role where investors can take part of. And one of the things that I'm seeing, the next big trend in crypto is what we call the role holders. If we started with mining and then trading, I think that the next one of the things in the next boom bust cycle will be role holding, where the more successful networks will create spots where in EOS it's still block producers. But you're seeing in other networks like Augur, all the validators, people who can actually, make money or make value on the other side of the networks. And I think, that's what's missing right now. And to my perspective as investors, that's the big thing investors should focus on. Because if you build a network and you provide the role holders or at least the base infrastructure for them, and the use case does exist, then that's what will help investors make money on the one hand and the network to grow on the other.
Because they will be incentivized enough to...
The investors will make money not just as, growing the value of their tokens, which is what most people are looking at right now, but they will, first off, think how many people are making money from mining. Bitmain, pre-IPO $15 million, IPO $50 million. They're the classic example of making money without actual investing, although they invested in hardware and everything. But that's the kind of thing that we're seeing as the next trend. People will start making money.
These are companies, right? Just full disclosure. iAngels and iCapital recently invested $7 million in the Bitmain pre-IPO, but here we invested in equity.
Yeah, you invested in equity and you get a share of the profits, and that's okay. But Bitmain makes their money not from holding equity that has a rising value. They're making money from doing actual work for a protocol, which they earn value in terms of mining rewards on. For Ether, for Bitcoin, for Dash, for Litecoin, for a lot of other tokens. And I think that somewhere along the way, or again, I'm seeing it, the next uptrend is where we'll start seeing investment firms, hedge funds forming their own kind of miniature, tech operations where they're running nodes that are doing validation works. They're running nodes that are, providing authority or identification, depends on the consensus model, and they will try to help the companies build a more decentralized network and providing the actual value, and by that, making their own tokens grow.
It's very interesting. So what you're saying is the role of the investor is evolving. We're not just financial investors anymore, but we're actually
At least the good ones.
Yeah, well, we're involved in building the ecosystem, in accelerating it, in incubating projects, in developing the protocols we support, in mining their tokens, in voting, and being active. I like it. So I want to go back to Or. Or, in one of the most bearish markets, Chromapolis managed to somehow miraculously rise above the noise. I'm getting phone calls every day from people in Australia, in South Africa, in the United States, in Canada, and everybody wants an allocation in Chromapolis. What's your secret?
Well, I guess, we have also, also it's my partner, so like we have been here for a long, long time. So we are not like a new company that is doing an ICO for the heck of it. We have been here before. We've literally developed the space back when we did color coins, and we did those tokens thing before they were cool. So a lot of people are doing the research on us, and they realize what we have done, what academic papers my CTO has done for the space, and so forth. So it was very, I would not want to say easy, because it was years work in the space. But while people do the research and they found that we are legit, and they like our approach and protocol and what we do now, it's enough for them. So we've been here for a while, we know what we do. And we hope that we can actually beat other protocols as well along the way. So it's a lot of viral marketing as well of what happened to us. People found out, they did their own research, they read the protocol, and then it just came from there.
So I wanted to talk a little bit about valuations. There aren't really existing frameworks that are proven regarding token valuations, although a lot of people are taking a stab at it, and there are even some books on the subject. Yaniv, I'd like to hear kind of your thoughts about it and how you value these projects and how you see the valuations going forward.
So basically, when you try to value anything, you basically want to measure the amount of trust people have that, in that project or any kind of asset. And when you do try to do any kind of speculation on the future value of an asset, then you have two main approaches. You have the technical analysis, what most traders do with graphs and candlesticks and everything. And you have fundamental analysis. Fundamental analysis basically says that you're trying to take what we call fundamental indicators of an asset and try to see whether they all round up to an actual valuation that makes sense. If we look at equities, you look at the cash flow, you look at a report, you look at P&E, and by that you can make a general assumption of what the value of the company should be and whether it's oversold or overbought. When you look at currencies, you just check the basic country that stands behind that fiat currency, and you look at their GDP, their national debt, interest rates, inflation. So every financial asset, everything that has value has fundamentals. The problem is, or let's say, what hasn't been discovered yet are what are the fundamentals for crypto. And that's one of the things that we do in our research is that we're looking at things that are meant, at least in theory, to provide some form of tangible proof for that product or that asset actually be working. If we're looking at a blockchain, it's the same as looking, if we would have looked at a normal company, then looking at the growth in number of transactions or number of wallets is the same kind of metric. We would see how fast or how slow it's growing. We're checking what we call a blockchain efficiency, meaning how good the product actually works with regards to the amount of usage, where we just, we use basic metrics from the mempool, like the average amount of transactions on the mempool, and versus the average amount of transactions going into a block in a 24-hour period. It's just taking basic queuing theory and applying it to the blockchain to see how efficient a blockchain is. But if you get like a score of 1.2, it doesn't really say anything. But if you look at it over time, you see the efficiency growing and the usage growing, and you compare different blockchains, you basically start to understand who is actually working and who is just talking shit. It's the same as if you would compare, two similar stocks, let's say Google and Facebook, and you'd see their cash flows, their P&Es, and all those metrics and how they grow. And you would be able to understand whether their market cap, makes sense if you compare it to other things. The same thing we try to apply on different blockchains and different projects, but we also add another layer of classifications. Just like you cannot compare Apple stock to an Exxon stock, because these are two different companies with two different metrics, it's not really true to compare Bitcoin to Ethereum, even though at the end they're all measured in market cap. They both have actual value, but Bitcoin is a currency and Ethereum is a platform, and they have different metrics you need to measure on. So we're working on two different fronts. We're working on the classification level, trying to understand the different kind of sub-asset classes that we have, and then later on trying to understand what the matrix are and do they actually justify the valuation. All of that, obviously, are for projects with an actual product working and a token being traded. It's very hard to do fundamental analysis for pre-ICO companies. It's, again, like investing in a very early stage startup in that sense. But that's, how we try to measure it, just the same.
But what about post-ICO? Let's take EOS, for example. Yeah. Okay? So let's say 99.9% of the transactions are just kind of speculative trading transactions, have nothing to do with the product, nothing to do with the network. So what could justify, this kind of multi-billion-dollar valuation?
People who want to make more money.
But what do they think they're going to make money from?
The bigger fool theory. They think someone's going to buy it for them later on with more money.
Okay, so it's just a matter of kind of speculation, no fundamental analysis.
The best, again, I'm always going back to history because I really like it, and I think we can learn a lot from the past. And you've seen that, in the 20s before, the big security bust, and in the 90s before the dot-com bust, you see a lot of companies that offer what we call dream companies with a lot of promises and not, actual working product or paying users that are, raising a lot of money on high valuation. And because of the hype around it, and because people think, hey, I'm going to invest that's going to make a lot of money, and then I can sell it to someone who will buy it from me with more money. And you see just history repeating itself. And I think it's just the same here. It's a phase that every new asset class, every kind of new asset is going through. And it's something, we took a big slap in 2018, and I think we're expecting a few more in the future. But we're still there in a place where 95% of valuations in the market right now are not justified, okay? Basically, the only thing I can justify...
So theoretically, we're going to go another 95% down?
Basically, there's always 99% more, no matter what the price is. But I think that the only thing that justifies... Yeah, again, and I think the only thing that justifies its price right now is Bitcoin. And most other projects are way, way far from where they're supposed to be.
Okay. Or what are you going to do to build kind of long-term sustainability in Chromopolis and kind of build value for token holders?
Well, I hope that adoption is the key adoption of the actual platform, and how we can actually move on from speculation of the prices at first to real live adoption in the end. And when adoption occurs, then the correlation will shift from more speculation to the adoption rate. So we think that the more the developers that will want to use our platform, hopefully, the more it will correlate as well in the long-term price. I mean, as Yaniv said as well, most of the 20 top platforms or like coins out there are really crap. I mean, you see like Tron, which is valued at $2 billion, and they have nothing. VeChain.
BitTorrent.
They have BitTorrent.
They have BitTorrent and a copied white paper.
And a commit white paper, yes. Where you have VeChain at $1.5 billion as well out of China. You never know how those valuations are coming from. Maybe a lot of market making and speculation too. But no, you don't see any working software as well. So we think as well with coming adoption, with a lot of marketing as well, putting on the adoption, hopefully we can as well come to those top 20. It will take us a while, but I hope that we will be there as well.
Okay, so before I open it up for questions, I'd like a little prediction from each of you. First of all, where is Bitcoin in, let's say, a year from now and 2 years from now? Ethereum, and what are your favorite projects?
Bitcoin 2 years from now, that's 2020. That's after the halving. I would say about over 100.
100,000.
Yeah. That's Bitcoin. Ethereum, around somewhere between 15 and 4,000. That's for Ethereum. 1,500 to 4,000 per Ether. That's, my prediction. It changes from time to time, obviously. Favorite projects. I really like Mainframe, which is basically a decentralized mainframe. Most people don't know that a lot of the world's most important systems are still based on mainframes. And I think that the concept of decentralizing the work being done is very interesting. I think Zilliqa is an interesting project. Basically, they're trying to compete with Ethereum, another one, but they have a real promising sharding technology out of the box. What else? Ontology, again, very interesting use case, trying to build infrastructure for other blockchains and enterprise projects. All might be able to tell more about that. That's, and again, I'm saying these are interesting projects that I think, will be there for the long haul, just, not just because they'll be worth a lot of money, but I think that there's real substance behind them.
So in terms of predictions, I don't predict, but I can say like we are living in a cycle world, so whatever was up will be down, and whatever is down will be up. It's the nature of things. I mean, I've been here like since 2011. I saw many crashes.
Are you still holding?
Not anymore. But I mean, I run a startup, so like I have to actually invest in my.
He has a stake in another place, but it's still in the same market.
But yeah, I invested personally as well in many coins before the ICO boom. So like I've seen a lot of crashes as well. I've seen when Bitcoin was up to $40 and it crashed to 4, and that was like the real first like big up that it had like in 2012, I think it was end of 2011, something like that. So that was the real like up that it was, and I never thought that like we will see those prices that we see now. So like who knows? Again on prices. In terms of interesting projects. Well, in terms of application, there is a very interesting company that is doing Expo Planet, and, which is doing a very interesting gaming use case out of Israel. And they have actually a live application as well, and they have they have a small community, but their community is very addicted to what they do. So like they play a lot in this specific game. So it's a very interesting project that I kind of like. There is actually another Russian project as well, Hans project, which is using as well one of my co-founders' blockchain academic papers, proof of activity. So he's implementing that as well now.
Enekium?
Yes, the Russian project, which is cool.
We're also advising them.
Yeah, so like they're using Alex old stuff. So it was cool to see that people actually implement stuff that my CTO Alex did many years ago. So like that's two projects that I like.
I want to add like one or two more. I'm very, very interested, and I have a lot of faith in something that's called proof of space-time, which is basically taking the proof of work and making it much more energy efficient by not relying on compute power, but basically disk space. There are more than a couple. There's SIA's already, out. There is Chia, the company that was founded by one of the people who founded BitTorrent. And there's an Israeli company, an Israeli project called Space Mash, or also doing it. All very interesting.
Also an iAngels portfolio company, by the way. Thank you. I'm going to open it up to questions. Yes?
You mentioned trust in the protocol, and then you said that centralized versus decentralized is flexible.
Yeah.
Isn't that the engineering equivalent of saying to an investor, we're bullshitting all the way into your money because we can do...
Definitely not. I'll explain why.
Just a case in point, without mentioning names, the recent Bancor heist, but it just can't be protocol.
Again, Bancor are good friends, and I think the only criticism I have with them is not the way they built their protocol, is their disclosure details. But again, and they did afterwards disclose exactly what's happened and how the protocol works. I think that, again, decentralization is a scale and not a binary game, and I think that there is room for everything, because if you look at, a lot of the new blockchains talk about the scalability trilemma. There's a triangle where security, scalability, and decentralization stands in all sides, and you have to put yourself somewhere inside that triangle, and everywhere you go towards, you have to give up, the others. And I think it depends on the use case. For example, EOS, which I'm not very fond of as a project, but the concept of EOS could be very useful for applications that require a higher throughput, because Ethereum right now can't support that. For applications that demand and require more trust and decentralization, Ethereum is more fit for. So I think the matter of scale is not a question whether you're defrauding investors. It's just understanding who your users or developer base is and where you're applying. What's the use case that they're going to do or going to use to build on your platform? That's my take.
Yes. Can you elaborate a little bit about regulation dealing with blockchain, not ICOs? Is there any hurdles about related to?
So blockchain is a technology. There aren't a lot of regulatory frameworks that deal with technologies. Basically, there are different aspects of the blockchain by being public or immutable. That does involve some form of regulation. So for example, if you hold personal details on the blockchain, that would be problematic from a GDPR perspective. But there is no specific regulatory requirement that I'm familiar with that regards the tech specifically.
What about the ERC 721? Dealing with
Not fungible tokens.
multiple ownership.
So right now you're talking about financial regulation, not technology regulation, and it's important to separate the two. Financial regulation is very early and very different from country to country. There are discussions that I'm aware of regarding non-fungible tokens, ERC 721 and 1155. Everything that's basically tokens that can represent physical assets on chain. These are all stuff being discussed right now. We're seeing huge progress, especially in terms of equitized tokens, tokens that represent actual shares. These are working projects, and it's sometimes hard to understand which kind of regulations they need to stand from. By all perspectives that I'm familiar with, again, everything that's being tokenized right now, it stands by the same regulation that it had to stand before being tokenized. So for example, if you tokenize securities, it's a security and it needs to stand by all security regulations. If you tokenize wine, for that matter, if there is any regulation regarding selling wine from specific... Again, same thing. The only discussions that are
The protocol is redundant.
it's not no. The protocol, what it does for tokenized assets is making it much more efficient and bringing in fractionalization for stuff like real estate, stuff that weren't accessible to a lot of people. So it makes it more accessible because of fractionalization, not because it's digital. You can buy a house online, but the fractionalization of ownership, being able, 100 people can own a house and divide the rent between them is not something that was feasible beforehand, and it
Technology is ahead of the
you can, I agree, you can, and you don't even need a blockchain to do that. But what it does is allow the liquidation part of it, which is much easier. You can, buy and sell a fraction of a house, which is something that's harder. Again, not impossible.
Because you can't register your ownership.
So what's being done, again, for everything that you're tokenize, you still need to have a real world connection, right? Because the ownership of the house can be registered on a blockchain, but if the owner of the house won't respect that, then it doesn't really matter what's written anywhere. But if you do have, one of the things that are being adapted right now, Ol can attest to that because he did a project with the Swedish government, right?
And India, right?
India too. But at least, to my perspective, most places are, register themselves in order to register to a specific entity that holds, the asset from official perspective, at least right now, until the regulation for that could adapt. And
No decentralization.
no, right now, listen, and one last note, decentralization, I said decentralization is a scale, it's also a process. Nothing starts decentralized. It always starts centralized and moves the way through. Some stop, but it always starts centralized. The best example we could see for a decentralized launch of a network was EOS, and that failed miserably. And even that wasn't really decentralized. It was supposed to be like X amount of block producers. And again, that didn't happen, and they reverted to one. So it's a scale, and it will take time. Okay. Yeah.
A few comments. You were talking before about permission blockchains, which it's like saying
Permission block.
Yeah, permission blockchains. It's like saying liquid gas. It doesn't make sense. If you have a blockchain, it needs to be permissionless, censorship resistant, immutable, and decentralized. So this
depends on the use case. I'll give you an example for something. Listen, on the philosophical debate side, I agree with what you're saying, but I'll give you a real world use case where permissioned networks are relevant, where you have multiple, let's say in the banking industry, you don't want anyone to run a node, or the banks don't want anyone to run a node, but they still don't fully trust each other. So that's an example of permission. There are use cases. I'm not saying, I don't like the banking ecosystem the way it is right now, but that's my problem. But there are use cases for problems that can be solved with permissioned networks.
Okay, so in this case, I think it would be better to just use a regular database and have people.
The only thing that blockchain is different, not the only, but the biggest thing that the blockchain is different from a centralized database is the matter of trust. Yeah.
Also, if you look at the centralized application nowadays, they only store data in databases. So, what's the point?
I want to refer to your notes. So it's basically about trust. And if all the participants trust each other, yeah, you don't need a blockchain. And in 90% of the use cases right now, you don't. Okay, but if you have a use case where there are multiple parties who don't fully trust each other and need a centralized, trustless mechanism to run the communications and store of data, then yeah, it's a valid use case. There just aren't too many of those at the moment.
Yeah, the second thing is in the topic of decentralization. You were speaking about different decentralized, let's say, projects. You were talking about Ethereum, and then I think Or said that nobody cares about Ethereum Classic. And I think this is, I want to disagree here, because
you can, you're entitled to your own opinion.
when Ethereum broke off from Ethereum Classic, what remained is an actual immutable decentralized chain. And it's interesting because especially nowadays, all the hype is going to Ethereum and all the hype is following Vitalik, which you said that's decentralized, which I'll disagree with that as well. But Ethereum Classic is where everything becomes interesting, where you actually have a Turing-complete chain that is decentralized and immutable. And
Was there a question there somewhere?
I just wanted to disagree with the nobody cares about Ethereum Classic.
They do have to add many transactions.
Again, you're fully entitled.
Blockchain aside, computers aside,
Yeah.
an idea, a sense, do you think that decentralized organizations are kind of like kibbutz or the old kibbutz?
Wow, DAOs. So basically, one of the interesting things, and that's a good lesson of history again for anyone who wants. Basically, the biggest invention Bitcoin has brought is scalable governance, what we call the problem of the commons, where when you scale a group of people that share a common resource to a place where their personal interests are better served by just doing what they want instead of preserving the common interest. So blockchain gave us a system of incentives, both positive and negative, depending on your consensus mechanism, to control that. So a kibbutz is
Maybe hyper-capitalism.
Yeah, it's
Communists. We can do it without being communists.
again, communism, capitalism. These are for me, it's just buzzwords. It's not a matter of blockchain. Kibbutz is a small form of common governance. If kibbutz grows too much, too many people, it will take itself apart because there's no real way to make decisions in a scalable way, and each member will take care of his own interest. What blockchain does is that it gives us a way of doing it on a scalable level with many more people on a digital infrastructure.
And then you separate the place basically from the deal, which is like an amazing thing.
Yes.
When it comes to trust, I'm thinking of public trust. Wouldn't it be a triggering aspect when a Bitcoin ETF is approved by SEC? And second question is, when do you expect that to happen? Van Eck is trying to do it for a number of months.
Yes, having a Bitcoin ETF will improve on the financial aspect the user experience of investors and people that potentially want to participate in the ecosystem and aren't doing it currently. And it also fundamentally creates more demand because when you have ETFs, then you're actually reducing kind of the supply of Bitcoins, which push the price upwards. And of course, that will also influence other decisions around other financial products of other cryptocurrencies. So I think, I'm sure you may agree with me that yes, that such a decision has the potential to trigger kind of the next step of adoption, and even more so just because of the endorsement that would come from the SEC in that respect, which implicitly gives Bitcoin and gives the ecosystem legitimacy. When that will happen, who knows?
There's a very interesting post. You could just Google all about Bitcoin ETF. There's a very interesting post that dissected all the big offers right now on the table for Bitcoin ETFs and all their dates, that are supposed to be approved or postponed again. There are very, interesting topics that it touches regarding why the Winklevoss's ETF was denied, and that most or all of the other ETFs still have the same kind of problems, which are market manipulation. But again, see if you look at that post, and you'll get the full scope of what I was about to answer if we had more time. So.
Thank you, everybody, for joining us. If you have
Thank you
more
very much.
interest in learning about ChromaWay or First, feel free to visit www.iCapital.io or reach out to us. Thank you.